It's Monday, August the 1st. Welcome to Business Incorporated, coming to you live from Lagos. I'm Chimizi Upi. Welcome. Nigeria sees slight improvement in its July Purchasing Managers Index from 50.2 in June to 51.0. Libya's government signs deal to end a blockade and restart all exports from the terminals shut down since December 2014. Plus, results of the last year's Johannesburg summit of the Forum on China-Africa Cooperation implemented with early. We'll begin with that story on China-Africa relations as a result of the last year's Johannesburg summit of the Forum on China-Africa Cooperation have been implemented with early phase achievements made. And that's according to the Chinese Foreign Minister Wang Yi. Mr. Wang made the remarks at the coordinators' meeting of the implementation of the follow-up actions of the FOCAC Johannesburg Summit in Beijing.
The first batch of $10 billion fund for China-Africa Industrial Capacity Cooperation has been launched, and an additional $5 billion special loan for the development of small and medium-sized enterprises in Africa is already in place. Over the past 6 months following the summit, China and Africa have signed 182 cooperation agreements in various fields, involving around $32.5 billion, with commercial loans accounting for nearly 90%, reaching $29.1 billion, according to incomplete statistics. We will strengthen ecological civilization cooperation and wildlife preservation, enhance Africa's law enforcement capacity in environmental protection, promote an environment-friendly capacity cooperation, and jointly safeguard ecological environment and long-term interests of Africa.
And China's Manufacturing Purchasing Managers Index, an index of factory activity, came in at 49.9 in July, down from 50 in June. Data released by the National Bureau of Statistics shows the index of 12 among 21 industries dropped in July. A reading above 50 indicates an expansion, while one below 50 points to a contraction.
The overall economy continued to go smoothly and modestly, which remains unchanged in July. The price also continued to rise. Therefore, the demand basis is relatively stable overall, which ensures the stable economic growth. Influenced by strong El Nino, the flood season came ahead of time this year. The heavy rains have swept most parts of China, especially the regions along the middle and lower Yangtze River, like Jiangsu and Anhui Province in East China, Hubei Province in Central China, and Hebei Province in North China. Those areas have been influenced more by the floods, leading to a relatively bigger drop.
In the meantime, many markets in Asia started the week on a positive note after weak U.S. growth figures released on Friday suggested the Federal Reserve would not be raising interest rates anytime soon. The U.S. economy grew at an annual pace of 1.2% in the second quarter of the year, much slower than forecast. Japan's benchmark Nikkei 225 index closed up 0.4% after a negative start earlier in the day. In South Korea, the Kospi rose 0.7%. China's benchmark Shanghai Composite Index closed 0.9% lower. But in Hong Kong, the Hang Seng Index ended 1.1% higher. In Australia, the benchmark ASX 200 Share Index gained 0.45%. And most European stocks reversed gains to trade lower today as investors react to European banking stress tests and new Chinese data which showed its official manufacturing gauge unexpectedly slumped in July. Now let's cross over to Frankfurt for a chat with DWTV Channels TV financial correspondent Annette Wisbach. Good afternoon, Annette. Good to have you again on the program. Now, the result of the stress test conducted by the European Banking Authority on Friday is out. Talk us through this. Which ones are healthy and which ones are wobbling? Were there surprises?
Well, actually, on average, one can say that the stress test has shown that European banks are somewhat resilient to economic stress. We have only 2 banks who actually fell below the 7% capital buffer threshold, previously announced as being important. That stress test actually this time did not have any stress threshold under which there needs to be a capitalization of the bank. So we have Allied Irish being very poor, or a poor performer in the stress test, and of course the ailing lender Monte dei Paschi di Siena, the Italian bank, long time being the problem child among the Italian banks, having actually failed the stress test. But for this lender, there was also an emergency plan in place already on Friday evening, agreed with the ECB to inject 5 billion euros in private investors' money in order to close the capital gap for Monte dei Paschi di Siena. So these are the poor banks, like the Irish, the Italians. Some of the Germans, I have to say, were doing quite poorly as well, at least in the adverse economic scenario. On the positive side, we have Scandinavian lenders, which have a very strong capital position, but that is a very traditional thing with Scandinavian lenders. They've learned their lessons from the financial crisis a lot faster than their other European peers.
Now, talking about the Italian banks, out of the 51 big banks covered in this stress test, 5 of them were Italian banks. Now, what does the stress test tell us about the financial health, and what's the talk out there about improving the Italian banks? I know that some analysts are already calling for flexibility in Eurozone rules covering government-financed bailouts in cases where banks' bad debt burdens were largely caused by economic downturns, like the case here with Italy.
Well, Italian lenders had a poor showing in these stress tests, one has to say, but one also has to say that it was a lot better than people and many analysts had expected. I remind you of all the chatter surrounding Italian banks some weeks ago, when loads of analysts were saying that many Italian banks will fail the stress test and there might be another Eurozone financial crisis. Nothing of that happened now, as those stress tests revealed that essentially Italian banks are not great, but they are not in such a bad shape as a lot of people had expected. But you also have to look into the details. The adverse economic scenario for Italy, which was tested in the stress tests, were not as, I would say, harsh as, for example, for German lenders. They only expected a economic downturn of minus 0.4% for next year. In Italy, which is a benign scenario if that is the adverse stress test. So, bottom line, looking at the market reaction today, is that loads of Italian banks are trading down tremendously. UniCredit, which is the biggest Italian lender, actually even was suspended from trading because they fell below the 8% threshold, because loads of people think that the Italian banks are in a worse shape than those stress tests are telling us. So the true story might actually be written on a different page when it comes to faith in those lenders.
Well, Annette, I hope those Italian banks will get all the aid that they really need. Well, that's where we will leave this discussion for now. Annette Wisbach, DWTV Channels TV financial correspondent, reporting there from Frankfurt Stock Exchange. We'll take a quick break now. When we return, Nigeria's Purchasing Managers Index rises slightly in July. Do stay with us.